Okay, I guess we're good to go. Good afternoon, everyone. Thanks for joining another On the Agenda event organized by the European Liberal Forum. Let me first start by thanking our distinguished speakers who agreed to be with us today to share with us their insights on such a timely topic. And of course, a big thank you to our dedicated project team that took care of all the preparations. I'm very, very happy to open today's discussion, exceptionally happy, on the discussion of the upcoming cryptocurrency regulation that is going to be debated in the European Parliament, and I will briefly explain why. So we are used to hear and read that the EU is lagging behind China, behind the US in technology and innovation, that there is a technological gap that we need to close, that we're not doing enough to embrace innovation. Well, let me tell you this. When the markets in crypto assets regulation is adopted, it will make the EU the first body to regulate the stablecoin market. So that's the reason today I have the pleasure to open the discussion on a regulation that can really make the EU a world leader in financial technology. So this is a great opportunity for Europe that also brings a large share of responsibility for EU lawmakers. Blockchain for financial services is an exciting new technology. When we talk about cryptocurrencies, we talk about a disruptive new type of money, basically, that can be a money that can be programmed in advance through the use of code. And among other things, this new type of money, cryptocurrencies, can bring a new era of instant payments for Europe. This can be a remedy for a long-standing fragmentation of the European payment system, for example. But it can also become a tool for money laundering and corruption. Private cryptocurrencies and stablecoins can also be designed to store value. This will eventually open up a new class of digital assets and investment opportunities for everyone. But again, it might have systemic implications for the financial system and for our monetary policies more general. So in another example, blockchain technology in the financial sector can also enable incredible new ways of decentralized governance, not only in corporate entities, but also in institutions, democratic institutions. This can make our businesses more efficient, our institutions more inclusive, more successful, but it can also raise many ethical questions. Who do we hold accountable for the actions of a decentralized entity, just to name only one? So you see, the possibilities here are virtually endless. And the pun was intended, of course, but they are not risk-free. How can Europe embrace this disrupting technology, blockchain, cryptocurrencies, whatever form this technology takes, while making sure it is safe to use by the citizens and their businesses? How can we leverage the immense potential of cryptocurrencies without disrupting the stability of an already fragile financial system? Should a private company be able to function essentially as a central bank? Can we regulate this budding new sector without stifling innovation? So these are all reasonable questions that we need to debate. And I'm looking forward to listening to our speakers discussing at least some aspects of these issues. And of course, the discussion cannot be and will not be exhaustive, but stay tuned and we will follow up with more events and publications on this topic. And this is because here in the European Liberal Forum, we're not afraid of technology. We're not afraid of the future. Together with 47 member organizations across Europe, we work to provide a platform for discussion that brings new ideas into the political debate in order to improve the choices that we make today, because these choices are going to shape our future tomorrow. So let's see how we can make cryptocurrencies work for Europe and for our citizens. Thank you very much for your attention. Andrey, over to you for discussion.
Antonios, thank you very, very much for those opening remarks. Indeed, it's a very important area, and we're very glad to have our distinguished speakers joining us today. MEP Andrey Kovarich will join us with a bit of a delay. In a couple of minutes, he will be with us. But until then, I have the pleasure of moving and introducing our first speaker, Elizabeth Noble. Now, Elizabeth is a senior policy expert at the European Banking Authority. She leads the EBA's work on crypto assets, DLT, and the platformization of financial services, and coordinates the European Forum for Innovation Facilitators. She also represents the EBA in EU and international standard setter policy work streams relating to fintech, market-based finance, financial system interconnectedness, and market access and regulatory perimeters. She's contributing to the delivery of the EU Digital Finance Strategy and was a member of the European Commission's expert group on regulatory obstacles to financial innovation, which is now disbanded. Prior to joining the EBA, Elizabeth spent 7 years at the Finance Ministry, advising primarily on the response to the financial crisis and the post-crisis domestic and EU regulatory reforms 2008 to 2014, including the reforms to the regulatory architecture in the EU. She also spent some time in the private sector. So I have the great pleasure of giving the floor to Elizabeth. But before I do that, I want to remind all our participants that you can already write your questions in the Q&A section there at the bottom. It has the option to upvote your favorite questions from other participants. It gives you the option to comment as well on other participants' questions. And we will take those questions and use them in the second part of the webinar, where we will have a discussion with both of our distinguished speakers. So without further ado, Elizabeth, please, you have the floor.
Well, thank you very much, Antonios and Andrey. It's a great pleasure to be here to talk about this topic, which is incredibly timely in light of the proposal from the European Commission for the MiCA text, but also because we are seeing really a proliferation of discussions at the international level where, again, the policy debate is very much live in terms of striking this balance between leveraging opportunity from innovative technology and, of course, mitigating risk. So it's my pleasure to first set the scene with something of a, let's say, historic overview of how we've seen crypto assets evolve since the first manifestations around 2008 and where we've got to in terms of the policy debate so far that's informed the Commission's legislative proposal. So I will now switch to presentation format and then share this hopefully on the screen with you now. Good. So I've taken a slight liberty with the title here because I've referred to crypto assets as a means of payment in the digital economy. And that's because I was attempting to use the most neutral possible term in terms of describing essentially the token that can be used as a means of exchange, whether one is acquiring a financial service or any other products and service in the digital economy. And of course, as a nice starting point, we have this quite beautifully drawn diagram from our colleagues at the Bank for International Settlements, where they illustrate the 4 key properties of money. So they tease out the issuer. So is it a central bank or some other body? The form, is it digital or physical? The accessibility, wide access or restricted access, and of course, technology, so account-based or token-based. And I think this sets the scene nicely for the different types of elements we're talking about, because of course, in this first part of the discussion, we're primarily focused on privately issued digital tokens, but of course, we may well progress to discuss more about publicly issued digital tokens and the debate towards central bank digital currencies. So here you can see towards the bottom right of the screen, private digital tokens, and these can be general purpose, or they can be wholesale and of a more restricted nature. And their features being obviously tokens, obviously digital, and varying degrees of access, but of course not issued by a central bank or other public authority. And what have we seen in the market so far? Well, of course, the original manifestation was essentially the so-called virtual currencies, such as Bitcoin, and they really came to the public for around about 2008. Now, they were perhaps initially conceived as a means of exchange, but these types of tokens have not necessarily proven to be particularly stable as a store of value. So for instance, if we take the example of Bitcoin, it is not collateralized. It's of course proven to be quite volatile in value. And so one can see it more as perhaps a speculative investment instrument than a store of value as an effective means of payment. And again, ourselves and our colleagues at the other ESAs warned only this month about the risks of this type of token, and the fact consumers must be alert to the prospect potentially of losing all of their money should they invest in instruments of this nature. Because again, taking the example of Bitcoin, there is no collateralization, there is no issuer standing behind the token. It is however much anyone wishes to pay for it. But since 2008 and that sort of first generation of virtual currency, we've seen increasing experimentation with essentially the same types of technologies, but in a wide range of use cases, both by financial institutions, potential new entrants, and pure technology companies. And here we've really seen the potential grow for the streamlining of transaction processes and other efficiency gains, including reduced cost, potential for financial inclusion. And so all of this taken together gives us a really interesting prospect in terms of the real uses of this type of technology evolving from those very preliminary use cases to something much more embedded within the core financial sector. And we've seen lots of different use cases here. So experimentation for cross-border payments, for trade finance, green bond issuance, security settlements, really across the board, lots of different types of emerging use case. Now, as we see these uses becoming more and more embedded in the financial system, there becomes this greater need for tokens that have a stable value and provide the necessary confidence for users, whether they are retail or wholesale, to regularly use tokenized means of payments as compared to a more traditional payment method. And so now we have the new generation of tokens that are intended to be much more stable in value. And these are the so-called stablecoins. I say so-called because stablecoin by itself is not a legal term, nor is it a regulatory term, because we tend to find that stablecoins are constructed in quite different ways. Some of them are one-for-one, fully backed. For instance, JPM coin to acquire a JPM coin, one has to have a pay-in pre-funded with deposits, etc. So you've got something very robust and very stable. Others purport to be stable, but perhaps they don't have a collateralization mechanism. So indeed, they might even be stabilized through the use of algorithms. They're pretty rare, but there are a few out there. And so we need to be a little bit cautious when we use the word stablecoin. But the general point is that we're increasingly seeing privately issued tokens for use as a means of exchange in the core financial sector, whether that's wholesale or potential retail users. And these form part of the wider set of universe of crypto assets. So, I mean, there are many thousands of different types of crypto assets, the ones we've just discussed being primarily the exchange tokens. Of course, there are others used primarily as a means of raising capital, and of course, those that can be more one-off use cases to access a good or service, the so-called utility tokens. But how does the existing scheme of EU financial services law fit to these assets? Well, we and our colleagues at ESMA carried out some work in 2018-2019 to see how the framework applies and whether it was indeed fit for purpose. And we found that every single use of a crypto asset typically requires a case-by-case analysis to see whether or not it already falls within existing EU law. Some crypto assets may qualify as financial instruments under MiFID. Some may qualify as electronic money under the second Electronic Money Directive. But the majority actually fall outside EU financial services law at present. So this means that we have some fairly severe consequences. Firstly, of course, uncovered risks, consumer protection, investor protection, financial stability, prudential resilience, the classic types of regulatory issue. But we also have another challenge, which is in the absence of a common European scheme of regulation, the opportunities to be presented by use cases of these assets cannot be fully leveraged because there's this scaling challenge, the challenge that one cannot passport, one may have to comply with different national schemes of regulation for crypto asset activities, which creates quite a challenging environment for firms looking to scale up the use of DLT or crypto assets in the EU. So in our reports, we advised the European Commission to take stock of these issues and to carry out what we describe as a holistic approach to crypto assets. So something that does achieve adequate levels of protection for consumers and investors, something that does effectively mitigate financial crime risks, something that does provide essential clarity for firms seeking to invest in these technologies so they can scale them cross-border, and of course to create a framework that is consistent with international standards where we have them. And here I would point to the FATF work on mitigating risks around virtual assets and virtual asset service provider activities, but also to be forward-looking, to actually set the standard internationally in some of these contexts where really Europe can front run and can point the way towards an acceptable level of regulation for these activities, in turn creating an innovation-friendly environment within the European Union. And of course, I'm happy to say that the Commission did act on that advice. Of course, not only our advice, the Commission consulted very broadly prior to publishing its proposals, and issued the regulation which essentially would establish 4 new schemes of regulation and of course new supervision structures. These activities, one group being issuance, the other group being so-called crypto asset service provision, such as wallets and exchanges. And for each of these activities, there's a slightly different scheme of regulation. We may have time to discuss that later, but notably, there would be specific requirements for issuers of asset-backed or e-money tokens, and then issuers of other types of crypto assets, and specific obligations for different types of crypto asset service provider, depending on the individual services offered. Now, in terms of consistency with other schemes of regulation, it's worth mentioning that MiFID financial instruments are out of scope of MiCA. So if something is a MiFID financial instrument, the MiFID arrangements continue to apply. Of course, the Commission has also presented its proposal for a pilot regime in relation to DLT experimentation in the securities and markets context. So that provides a space to investigate whether other clarifications or amendments to European law may be necessary. But we also carve out of scope so-called central bank digital currencies, because of course in the European space we don't yet have any, but they would most likely present very different issues to privately issued crypto assets. Now, I won't go through the key definitions in any detail. Of course, these are as per the Commission's proposal, and I imagine these points will be subject to fairly extensive discussion in both the Council and the European Parliament in terms of overall scope and the way the different aspects of the regimes fit together. But I'm typically asked the question of where do the so-called stablecoins fit in? Well, depending on the individual features, they could be e-money tokens or asset reference tokens, typically within the MiCA language. But again, case-by-case analysis is needed. And then just as a sort of final set of remarks, I would note that we are, of course, being very proactive at the European level in terms of presenting this proposal and ongoing work to monitor the crypto asset universe. But we're also working very closely with international partners in this space. So, of course, a lot of work related to so-called stablecoins being led by the FSB and leveraging inputs from CPMI, IOSCO, FATF, Basel, and so on. The work of BIS investigating central bank digital currencies, and of course, the ECB, among other central banks, moving forward to investigate central bank digital tokens. And I think Christine Lagarde indicated that her general hunch is that the ECB will at some stage adopt a digital euro, but of course the prior analysis still needs to be carried out. We work closely with the other ESAs, and we also work with the competent authorities represented on our boards to facilitate knowledge sharing and to promote dialogue on crypto asset issues pending the outcome of the MiCA proposals, insofar as possible to create, again, a consistent approach towards the mitigation of risk, but also, again, to leverage opportunities. But I think at that point I will pause, and of course we may pick up some of these issues or some of these work streams later on in this session. Thank you very much.
Thank you very much, Elizabeth, for that very insightful presentation. I'm gonna let that sink in a bit with our participants, give them a chance to fully grasp that, maybe even write some questions in the Q&A, which we'll use in the second part of the webinar. And I'll take this opportunity to move on to our next speaker, MEP Andrey Kovarich, who we're very, very lucky that he was able to join us a couple of minutes ago. And before I give him the floor, I just wanted to say that Andrey is a Czech politician who was elected as member of the European Parliament in 2019. He's a member of the Renew Europe group and is serving on the Committee on Economic and Monetary Affairs. And in addition to his committee assignments, he is also a member of the Parliament's Delegation for Relations with Canada, and he is working extensively with the markets in crypto assets regulation. But I'm gonna let him talk more about that right now. Andrey, please, you have the floor.
Thank you very much. First of all, I would like to check that everything is working in terms of connection. I see thumbs up. Thank you very much, Andrey. First of all, it's a real pleasure and honor to be today with you in this conference, and I'm really glad that we are discussing this issue which is actually gaining some traction also on the European level. But not only I would say in the closed financial circles, but I think it more in more general terms also within the broader public. So I'm really glad that we can have this debate. I think it's well, it's fair to say it's quite hard to step in after Elizabeth's very extensive presentation. I think she managed to explain perfectly the basic layout of the current regulation, or the proposal of the regulation that we have on the table. Maybe let me start at the beginning with a little bit of broader context on digital finance. I think this is where we can actually sort of situate and locate better than the entire proposal. The European Commission, and it was also part of the presentation before, are the institutions and especially those dealing with financial services are looking into the crypto assets and virtual currencies for some time. And I think within the European Commission and other institutions, the work strands on this particular area is actually joined into, let's say, more broader digital finance agenda. And I'm really glad for that, because I think that we have first of all, great potential in Europe. We have a lot of companies, a lot of potential for innovation, startups in terms of fintech companies, but in general in providing innovative financial services. I think at the same time, having said that, we have much more reinforced, let's say, regulatory framework, especially after the previous economic and financial crisis from 2009, 2010, and so on. I think since then the level of resilience of financial sector in Europe has been increased substantially, and then also I think let's say the position, the place that the Europe plays on the global level in terms of let's say hub for financial services, which and this is it's frank to say was much more important when the UK was still part of the European Union. But I think even after the UK left, we still have I think an important role to play in as European Union on global level in these terms. And I'm really glad that we are actually also sort of demonstrating it when we discuss various issues such as regulation of crypto assets. Very recently, and it has been also, I think, something that helped accelerate the proposal from the Commission that Elizabeth referred to in her presentation. So the digital financial services package that has been presented by the Commission back in September 2020, I think it was also much accelerated and sort of maybe even enhanced by the difficult experience we have through the pandemic. It is clear that with restrictions on sector, on many sectors, with restrictions on movement, on travel, on providing services, etc., many companies, but not only those who are actually active in financial services, but much broader range of companies, had to rely on digital financial services, and for some of them even have to discover this area as something brand new. And I believe this is if there is something to take as a lesson from the pandemic, it's actually that I think we have the potential now. We have also the interest, and maybe it's sort of an acceptance throughout the business sector for developing, let's say, much more comprehensive regulatory framework on the EU level, and I'm really glad for that. I can only agree with what has been said on the potential for growth in digital finances, for potential of lowering costs for business operators when applying innovative financial services solutions. And also, and I think this has been also mentioned, and in my view is one of the key principles under the MiCA regulation, but others as well. It's actually to find a common ground for the entire EU 27, so that we can cope better, or maybe we can even sort of win over what has been called a scaling up challenge in the European Union, which I think is one of the biggest obstacles that we have. I fully agree with that statement, and I think by providing a unified regulatory framework, which among others would also look into more harmonized supervision, for instance. This is exactly the opportunity that we can actually then tap into, and for companies that are developing their business models in various member states, to allow them and facilitate for them to scale up over the entire EU market, so that they don't have to comply with some of the burdensome administrative regulatory requirements that are different from member states to member state. This is I think also an opportunity for us to provide them more harmonized, regulatory framework. Very quickly, because I think the most interesting part definitely of this event would be the possibility to discuss on the topics that are of interest for the participants. Very quickly on maybe where we stand on MiCA in the Parliament, it has been said that after the European Commission put forward the proposal of the Digital Financial Services Package, which consists, apart from Market in Crypto Assets Act, it also deals with digital operational resilience. I think another very important piece of legislation that aims to reinforce and build cybersecurity resilience in financial sector. I think a very topical issue. Another piece of legislation proposing a new DLT pilot regime. So sort of a pilot project for providing a regulatory framework for more innovative projects, and other accompanying pieces of legislation. On MiCA currently, the committee that I'm working in, Economic and Monetary Affairs Committee, is taking the lead. Our colleague Stefan Berger from a German delegation in EBP is the rapporteur. I have the honor and pleasure to represent the Renew Europe group in the Shadows rapporteurs team, and we already have finalized and published the rapporteur's draft report, which is available, and we are currently working on our let's say positions and identifying areas where we would like to focus more, and where we would like to bring in some more improvements. I know that the very similar process is actually taking place also among member states in the Council. It has been already started with the previous German presidency. Now the Portuguese presidency is also pushing forward, and I think the process is ongoing. On the timeline, I think the key for me, and I say it in many events, I think because, and it was perfectly shown in one of the graphics that we saw in the presentation, we are currently touching an area that is mostly unregulated. So this is a sort of uncharted territory, and I think with a lot of ambition that we would like to put into this framework, we should actually take time to get this right. It's our first opportunity to deal with it, and I think the key would be to provide a stable, predictable, flexible, but also sort of open regulatory framework that would not only cover the key concerns that we as legislators and regulators already or have in other parts, and it was also mentioned: investors protection, consumer protection, financial crime, anti-money laundering legislation, prudential framework, resilience, etc., etc. And I think this is a a solid block of let's say safeguards that that are already part of the European legislation that we need to sort of translate also in this new piece of legislation, but also to remain to leave it as open as possible, so that we do not limit, so that we do not restrict the potential for innovation in Europe. And so in this regard, I think the key would be to see, as it has been mentioned, the definition, the scope, the categories of crypto assets. I think also the proportionality, because not all of them have the potential to be significantly relevant for financial stability, for instance. And two things that were also part of the previous presentation, and I think they really merit or deserve to be highlighted. It's the international dimension, because we have the possibility to sort of set standards also in Europe in some of these areas, and I think it would be actually good to see also the potential global impact and to see in other work strands done on the international level, and the link with the cryptocurrencies or currencies that would be issued digitally by central banks, because we see that this trend is also being explored. We have, for example, the Swedish central bank that is very advanced in working on digital koruna. We know that Chinese are actually launched a pilot on digital yuan. We see some development in the US and also studies that are being carried out by European Central Bank on digital euros. I think these are also, sort of issues that are actually should be part of our discussion. I would end here, and I'll be happy to take part in the discussion and reply to any questions you may have. Thank you.
Andrey, thank you very, very much for your intervention and for giving us a bit of an insight into your work in the European Parliament on the MiCA regulation. Before I go to the Q&A, and thank you, Anna, for writing the first question. I do encourage all the other participants to write their questions, comment on other people's questions, and we'll get to them in a second. But I just wanted to, I think, kick off the second part of the debate with a question that I want to pose to both of you. Now, Andrey, you mentioned and you touched a bit upon this as well, and it goes the following. It's during a webinar, I think, organized by the European Banking Institute not that long ago. One of the directors from the European Commission said that for once we are actually ahead of the curve when it comes to creating regulation for this emerging market, for the market on crypto assets. And we have to stay there, and I fully agree to that. We really have to stay there. He was trying to kind of control a bit the request to move too fast in creating this regulation. And this is where my question is: do you think that we are indeed moving too fast and we should slow down? Or do you think that, as Andrey, you were giving examples of other countries who are also looking into this, do you think that by slowing the pace down right now, we might actually lose this lead in the very near future? Does one of you want to take the lead on this one? Okay, Andrey, go for it. Thank you.
Thank you. If I may, for a quick reply, I think I agree with the statement and the assessment of the situation. I said in my introductory remarks that I think in terms of the progress on the files, I mean, it makes sense to take enough time we need to discuss it properly and to get it right. But at the same time, I don't think, I wouldn't be afraid that we are hurrying hurrying up too much. It's we are actually witnessing various initiatives in terms of cryptocurrencies or crypto assets for more a decade now, and some of them actually, I think, reached a significant size, significant volume, and also sort of relevance. But having said that, I think also when we look at the not only the central banks initiatives that are exploring possibility to issue the digital representations of the currencies, we also see a number of private initiatives, and then again, I think Elizabeth had them in her presentation very well regrouped on one slide. And for instance, initiative like DM, or formerly known as Libra project by a number of companies, including Facebook. That one is actually also in quite advanced phase of development. So I think we should not be afraid that we are advancing too fast. I think we should be able to keep the rhythm, the pace we have. We should also look into other international partners, the way, for example, they approach those issues. But I think so to say sort of as a motto, I think the time is now, and I see it also in terms of the fast development of the technologies and the digital finances in general. I think we'll soon discuss in Europe issues linked to open banking, open finance concepts in general, and I think those again would be part of our discussion. So I wouldn't be afraid of being too fast. And as I said, I think the key would be, to provide with the regulatory framework which would stay with us for some time, so that we, provide predictability to business operators, but not only to them, also to supervisors, to regulators, so that we know how we want to sort of shape the regulatory landscape of digital finance in Europe.
Thank you, Andrey, very, very much for that answer. Elizabeth, would you like to come in on this one?
I mean, I can only agree about this sort of balance between, of course, getting the constructs of the measure right, but against a backdrop where we're seeing an acceleration towards experimentation with this technology, and firms really looking to us for clarity about regulatory requirements, but also supervisory expectations. Actually, MiCA itself, of course, sets the regulatory frame, but we also need to have this consistent dialogue at the supervision level, so that supervisors themselves already have a common understanding about acceptable uses of this technology, and also their own expectations about, for instance, how one would go about effectively supervising, so equipping supervisors to ask the right questions, to demand explainability about operational resilience and so on. So I think working collectively on the legislation, but also on this supervisory convergence is really critical, so that insofar as possible, we can create that common scheme on a timely basis that does mean that European businesses can leverage this technology where it's proven to have a real benefit for citizens and, of course, for business, including in the context of supporting the COVID recovery.
Indeed, that is a very, very good point. And I would like to do a quick follow-up before moving to the question from Anna from the Q&A section. Anna, you've mentioned in your several times, I think, you've mentioned the DM payment platform as well, and you've also mentioned your colleague Stefan Berger from EPP. Now, I know that one of the draft changes that he is proposing to the MiCA regulation is the idea of giving the European Central Bank the license to stop any stablecoins that it considers, let's say, dangerous, as a response to this Facebook-led initiative of DM, former Libra. What are your thoughts on that?
I think that's definitely one of the critical questions that we would need to deal with when discussing the proposal of MiCA. We were discussing this also with Stefan, and I'm discussing this with various stakeholders. In principle, I see point that he wants to address, and I think it's a legitimate discussion on how to actually approach those types of let's say privately launched issued crypto assets that would be significant and relevant enough for the monetary and financial systems and stability potentially. So I think this debate is definitely legitimate. I had my concerns on maybe the institutional setup. I think one of the proposals that we saw in the draft report was to mandate the ECB in order to issue opinions, and as you described, the license to kill. I think we need to look more in detail into this proposal, because if I look at the ECB as a central bank for Eurozone member states, then I sort of, and myself coming from Czech Republic, still not being a member of Eurozone, I think we need to see how we can actually set the institutional framework so that it actually fits the entire EU27, and so that it's sort of harmonized and uniform, so that we don't have a specific provisions, maybe just for Eurozone countries and specific provisions for non-Eurozone countries. And I think the giving competence exclusively to European Central Bank can be problematic in these terms. And this will be, I think, one of the issues that we will, together with other colleagues from other political groups, would like to see more in detail, as I said, and discuss based on the proposal we have, because I think that we need to sort of respect the EU27 and the sort of impact and transposition application of the regulation in the entire European market.
Andrey, thank you for that. Elizabeth, what do you think? Should the ECB have a 007 license to kill?
Well, ultimately, of course, it's a political choice in terms of how the safeguards are embedded in the structure. And of course, it is entirely correct to recognize that monetary policy considerations should be taken into account. I think the Commission's proposal already does that to some extent. And then, of course, there is this debate to be had about precisely how to calibrate the framework to make sure that there is that safeguard, so that one avoids a risk of there being some adverse implication if there is a large-scale private issued token coming into existence and being used by consumers as an alternative means of payment. So I wouldn't comment on the precise calibration. That is a political choice, but I think this remark about the need to think about this a little bit more broadly. So the role of central banks rather than a specific central bank is important, because of course within the European space we do have still multiple different currencies in circulation. So I think, as the Commission's proposal already foresees, ensuring an appropriate role for central banks where they're relevant is important. And if I may bring in a wider dimension, I think the proposal includes extremely important provisions around so-called supervisory colleges. And the reason why I think these are so important is because when we look at examples such as DM, we have lots of different entities involved in the wider ecosystem for distribution from the issuer to the end user. And these firms may have a different regulatory status. They may be located in different jurisdictions. And so I see a need for a close dialogue between all relevant authorities in seeing how these ecosystems evolve, they develop, and also how risks within part of the system can be mitigated so they don't have a contagion effect across the system as a whole. And so here I would see a role for, of course, financial sector supervisors, of course, central banks to take account of those monetary policy considerations that are not just relevant to authorization, but also on an ongoing basis. And I think an interesting point to think about is, do we also need to build in some sort of role for other authorities? So consumer protection authorities, data protection authorities, and maybe even some sort of competition dimension. But I think that's quite illustrative of some of the wider debates we're having around digitalization of financial services, platformization, and how you see these new ecosystems potentially coming into existence that are not just relevant for us as financial sector supervisors, but raise much broader and interesting multidisciplinary issues.
Well, thank you very much. You've actually even touched on the follow-up question that I had prepared for you, and I'm very, very happy for that. But I'm still gonna ask you one quick question before moving forward. How did the EBA find this draft? And I'm going to reference back to your presentation, to that holistic approach that you referred to, and those 6 elements of that holistic approach. Do you find these 6 elements well represented in this draft regulation? What are the shortcomings, or where do you think that, like you already touched upon a bit in what you previously said, where do you think the regulation could be improved in order to truly embody this holistic approach from your presentation?
Well, I think in general terms, we're very supportive of the proposal because it does indeed cover this quite broad gap that we currently have, where we know there are limitations to the application of existing European law, and there is a need to ensure there is a common framework to serve crypto assets of different forms and to be used for different purposes. I mentioned the college provisions as being vitally important and potentially benefiting from even greater elaboration in the proposal. I think other aspects to consider, of course, the intersection of the different regimes currently foreseen in MiCA. So I think, as colleagues have already mentioned, this sort of balance between risk mitigation, but also this need to be essentially business model neutral. So this is all through the prism, of course, technological neutrality, but also business model neutrality, so that we can ensure that there is a sort of wide market with lots of different actors involved and performing different functions using crypto assets, however maybe they choose to use them. So that's not so much a point for improvement, but I think it's just one to watch as the text evolves, to make sure that we continue to have a good balance in terms of the risk mitigation, the opportunities to be leveraged in this business model neutrality point, which I think is a deep challenge for all of us, actually, because no one quite knows how this will develop, or how many new use cases may emerge even within the next 12 months, let alone the next sort of 5 to 10 years. So something for us to think about.
Elizabeth, thank you very much. I'm conscious of the time right now. I know that we have just a couple of minutes left of this webinar, so I want to take the question from Anna from the Q&A. Thank you, Anna, and I'm just going to read it out right now. Does MiCA address the environmental impact of crypto assets? How can the EU incentivize green energy for crypto assets using blockchain technology? Now, of course, this is going on the idea that all of the Bitcoin mining and all of these systems going non-stop, they really consume a lot of energy. So I assume it's a question primarily focused on the future, obviously, into how do we make these technologies a bit more environment friendly, let's say, and can the EU regulate in this direction? Andrey, would you like to maybe tackle this first? Just a couple of minutes so I can give Elizabeth the word as well, and then we'll close.
Sure. I get the message. Try to be as brief as possible. Well, I think, I mean, first of all, the MiCA is primarily the let's say financial piece of legislation in these terms. But I think the environmental concern that is raised is again very legitimate, and we actually had when we are discussing among colleagues between political groups. We had one of the issues that we discussed is actually how to address the environment dimension, let's say of the technology, and I'm quite sure that we will have some in later stage of negotiations of the report. We will have some remarks on that. I have been rapporteur on the own initiative legislative report of the Parliament on digital finances, and this is exactly one of the dimensions that we addressed. At the same time, I think it's important to see that obviously we have still on our eyes the example of Bitcoin being very energy inefficient. At the same time, we also see that some other, let's say, newer or more recent generation of crypto assets are much, let's say, less demanding in resources and energy. And I think what we should do, I'm not sure if we can do it only through and with MiCA proposal, but in terms of a general regulatory framework, we obviously should, as European institutions, to push for more sustainable and more environmental friendly applications of the technology, so that these concerns and these risks are mitigated to the highest level. But I think this is also something to see and to support in terms of research and development. We will see that, with introducing new types of technologies, but also new use cases of the current technology, we can have much let's say much more sustainable business models also taking place. So I think it's an important point to mention. We have to see how exactly to translate this, but definitely it will be part of our discussions.
Andrey, thank you very much. Elizabeth?
Again, full agreement. I think MiCA is one avenue, but also to draw attention, as mentioned, to the Commission's wider work on the taxonomy, where I believe there will be a reference to blockchain technologies. So I think that provides also a very nice setting to help improve transparency and inform decision-making around investments in these technologies. So I think that's a very positive step in terms of ensuring informed choice when it comes to both the application of the technology as a business, but also as a consumer.
Indeed. And I couldn't have put it better myself. And that's a very, very nice note to finish on. We're at the end of the webinar. Before we leave, I wanted to draw a couple of conclusions from what we've discussed today. There's a clear need for the creation of legal certainty for these new markets, minimize risks. But at the same time, we do need to help the scale-ups in Europe and to try to stay ahead of the curve while fostering an innovation-friendly environment that will benefit ultimately the consumers, businesses, and everybody in the EU. With that being said, I'm very, very grateful for your participation today. Elizabeth, Andrey, thank you very, very much for joining us this afternoon to discuss cryptocurrencies in the digital economy. Antonios, thank you very, very much for your very, very good opening remarks and for being with us today. I would also like to thank all of our attendees who joined us today. This recording will be published on the ELF event page on the ELF website in a couple of days. So if you missed anything, or if you would like to share it with your colleagues or share it on social media, you will find it on the ELF page where the registration button was as well. Thank you very much, everybody. And I'm going to leave you with a reminder that On the Agenda is coming back in 2 weeks. We're going to see you again at the same time on Zoom on the 8th of April. Until then, thank you very much. Wish you a great afternoon. Stay safe, stay healthy, And yes, wish you a very nice end of March. Thank you.
Thank you for the invitation. Bye-bye.
Thank you. Bye.
Thank you.